575 million ounces claimed. Only 77 million ounces exist. That is 13% coverage. Those two numbers cannot coexist forever. OG John AG here. Drop OG John AG in the comments if you are here paying attention and actually learning. Now, the COMEX structure just tightened further. Let's get straight into it. Lead story today: CME Group COMEX Silver Warehouse Report. Registered silver sits at 77 million ounces. Open interest implies 575 million ounces of claims. That sets coverage near 13%. Effective this week's latest warehouse update. This follows steady registered declines since 2021 peaks. At the same time, open interest remains historically elevated. The unusual detail is the divergent speed. Inventories fall while claims stay high. The timing is what deserves scrutiny, not the event itself. The timing. Think about what that sequence actually means. A shrinking deliverable pool meets persistent leverage. That creates pressure points. Where does that pressure release first? The ones paying attention already know what to watch next. Before we go further, if this kind of data-first analysis is what you have been looking for, hit the like button right now. Subscribe to OG John AG 1.0 and share this with one person who needs to see these numbers. Now, back to the data. Before I show you the full data picture, consider this. The last time coverage approached these levels, volatility expanded sharply. The data is already telling you something. Let's build it out. Now let's build the full picture because COMEX data does not exist in a vacuum. CME Group Warehouse Stocks Report has dropped. 77 million ounces registered reported by CME Group. Total eligible plus registered near 270 million ounces. Open interest near 115,000 contracts per CME data. Each contract represents 5,000 ounces. That equals roughly 575 million ounces claimed. London Bullion Market Association reports total London Vault silver near 840 million ounces. That includes ETFs and allocated holdings. COMEX registered is only a fraction of that pool. The rate of registered decline is not slowing. It is compounding. Year over year, registered silver is down over 30%. At the same time, COMEX open interest is near multi-year highs. The data is doing the talking. The ones who have been called alarmists for watching coverage ratios, they are not saying much right now. Think about the connection. Lower deliverable metal meets steady leverage demand. That is not coincidence. That is a pattern. And here is what makes that picture even harder to ignore. The coverage ratio now sits near 13%. That means roughly 1 ounce for every 8 claimed. Historical comfort zones sit far higher. At the same time, ETF holdings show mixed flows. iShares Silver Trust reports fluctuating daily ounces held. Some weeks show inflows. Others show steady outflows. That creates a fragmented picture. That is not a contradiction. That is the setup. And before anyone takes that as a green light, setups can take a long time to resolve. What this tells you is the structural picture. The timing is a completely separate question. Anyone who claims to know the timing is selling something. Sit with that. Here is the number most people are not talking about. Global silver demand sits near 1.2 billion ounces annually. Supply struggles to meet that consistently. Now global macro, because this is no longer a backdrop. It is the primary variable. The Federal Reserve balance sheet remains above $7 trillion. U.S. debt exceeds $34 trillion per Treasury data. Real interest rates remain volatile across the curve. Industrial demand for silver continues expanding through solar installations. Solar demand alone consumes over 150 million ounces annually. That number continues rising per International Energy Agency estimates. At the same time, geopolitical tensions impact supply chains. Mexico produces roughly 25% of global silver output. Any disruption there impacts supply directly. Markets are still pricing stable supply and manageable demand. Look at those numbers and assign probability carefully. When markets start pricing constrained supply reality, silver reprices higher. When liquidity tightens aggressively, silver can reprice lower short term. That is the historical pattern. Every time supply tightens with leverage high, volatility follows. It has not been different yet. Think about what that sequence actually means. Silver Western Spot sits near $28 per ounce. Shanghai silver prices show periodic premiums during tight conditions. Premiums fluctuate between 0 and several percent depending on flows. Short-term picture remains mixed. Price consolidates within a defined range. Key level sits near $30 resistance. Support sits near $26 region. If 30 breaks with volume, upside expansion follows. If 26 fails, downside liquidity sweep becomes likely. That is the only short-term read that matters right now. As for trading it, I cannot see a clean picture on the lower time frames right now. I cannot tell you what silver does tomorrow. Nobody can. If you think you know, good for you. Volatility remains compressed relative to structure. Sidelines is not weakness in this environment. It is the only edge there is. I have called this market both directions. I will call it again when I see it clearly. Right now, I do not see it clearly. The tape decides, not me. Here is the honest truth. Both sides of this trade have a real case, and the one you ignore is the one that will cost you. So let's run both. The bear case is real. COMEX eligible silver remains above 190 million ounces per CME data. Industrial demand can slow during economic contraction phases. Strong dollar periods historically pressure silver prices lower. The bull case is equally real. Registered silver sits near 77 million ounces. Coverage ratio sits near 13%, which is historically tight. Solar and industrial demand continues expanding year over year. Size correctly. Know what you are in before you are in it. The physical market already knows where this is going. The paper market is still arguing. That argument does not last forever. Everything shown today points to one thing. Structural pressure is already built into this market. The only question is when that pressure releases. Don't take my word for it. Verify every number I gave you today. Check the data yourself. CME Group COMEX reports, LBMA vault data, U.S. Treasury debt data, logic over hype, always. If this analysis added value, like this video right now. Subscribe to OG John AG 1.0 so you never miss a data drop. Share this with one person who needs to see these numbers. The ones running the OG John AG 1.0 playbook do not wait for the mainstream to catch up. They already know. The ones paying attention see the pattern forming. The ones who verify do not argue about it. Think about what that sequence actually means. OG John AG 1.0. Out.